biggest trade that I ever took back then was CNDD went from $1 and I got in about 105. It went to 10.
Jesus. Welcome back, everybody, to Be the Trader. Today I am in Texas, but I feel like I'm in New York winter because I'm at my man Jay's place, and he's from New York and he loves it cold. So I had to borrow a big ass sweater, but I brought in an expert OTC trader who's been trading for many, many years to shed some light for all of you. But before we dive into that, Jay, we need to learn more about you, man.
Yeah,
so
man.
Welcome to the show, brother.
Yeah, I appreciate it. Thanks for having me.
Absolutely, absolutely. So I want to know, how did this get started? Like, how did you fall into trading? What happened?
So it's not the normal story. I wasn't like looking to learn to trade.
Yeah.
My best friend, who's still my best friend, was working for me at the time, and he said he basically had a stock tip. They would get in these stocks. It was back when OTCs, the promos used to really go. And he said, we get you in the stock early, and then it gets promoted, and then you sell it on the way up and you make money. So I did it. So it was a very emotional time for me. I put in all my savings, which was 50 grand at the time. And
when was this? Give us some perspective.
This was in 02.
02, okay.
And the symbol was VDWB. They don't trade anymore. And immediately I bought it 30 cents. Within a couple weeks, it was down to like 15 cents. So my first experience was I'm 50 grand to 25 grand down, right? Great tip.
Yeah.
Yeah. So I'm like, I want out.
Yeah.
And they told me not to sell. It's going to be promoted. So I didn't know any better. So I said, all right, I'll stay in. And of course, as it got back to break even, what every trader wants to do is just take their money back.
Yep.
And they said, don't do it. I'm like, I have to. And they said, just stay. So long story short, I stayed in it. It started to go up. It got to about 67 cents. So now I'm up a good amount of money. And again, it was a very emotional time for me. I had wireless phone stores at the time. So I took my entire capital, $100,000 that I needed to buy equipment, and I put it in. Yeah, and the stock went to $2. I was up at one point, $667,000. I never seen that much money that quick in my life.
And your first trade?
My first trade. I knew nothing about anything about trading, but I learned already what greed is. And I said, my friend said, you should start selling, don't you think? I'm like, no, when it gets to 1 million. But as we know, if it got to 1 million, well, when it gets to 2 million.
Yep.
So I didn't sell, and then it started to drop, and then started to sell over days. If I knew what I know now, I would have just dumped everything because there's so much liquid, I wouldn't crush stock, but we didn't know. So by the time I got out, I was at $436,000 that I made.
That's what you locked in?
Crazy. Yep, locked in $436,000. So I was immediately hooked. How could you not be? So I got 2 more tips or 3 more tips from the same source. All went against me. I lost half of it back.
Okay.
And at that point I said, you know what? I'm not going to take tips anymore. I'm going to figure this out. And that's what birthed trading for me.
Wow.
Yeah.
Holy crap. Okay. So that is the craziest story because you never really hear that type of story either.
It's very different.
And so you said you had at the time a business as well.
Correct.
The time. What was that business?
Verizon wireless phones.
Oh, really? So you own little stores?
Yeah,
locations?
multiple kiosks in malls.
Oh, crazy! And so you took all the money that you needed to buy more equipment and put it into the stock.
Into the stock. Very emotional time. Craziest thing I've ever done.
When you keep saying that, very emotional time, what was so emotional about that time?
There were a lot of things going on. Verizon Wireless was getting rocky, just the whole industry, because more people were getting phones, and Verizon Wireless was starting to come into the malls with their own locations, and that sort of putting us out of business. So that was going on. It was right around the time I was thinking of opening a nightclub, which I did end up opening. It was just, I had some fallout with some really good friends. Yeah, there's just a lot of stuff going on. And
And so that so what you mean is all that emotions came in and you're like,
right.
Forget it.
For some reason, I said, I'm just going to do this. Yeah. And after losing, like I said, after losing half of it back, I said, I'm going to just figure this out. And it took me, for a few months after that, I didn't take a lot of trades actually on my own.
Really?
For a few months. But just little by little, I just started to look at stuff. And then within a few months, I started to become profitable on my own. But I really believe that's because I was just going in the market, and I was only going in the last 90 minutes of the day, which is still what I do.
Yeah.
But I was just going in, like looking for stocks, looking for something I thought was going to go up, basically, like that. Because there wasn't anything around like there is today, you know, to really learn.
Yeah, there was no.
It wasn't like it is now.
Education's all on YouTube.
Yeah.
It wasn't even YouTube. There was like.
Yeah, it was kind of crazy. Like the only things that I was on message boards, basically, because, you know, you look at stuff and you start to think, I wonder, you know, what this means. And I'll just Google something or something like that. And that's basically how I learned. So I didn't like get into learn to trade. I just kind of fell in.
So I want to know then, because you make a lot of money, lose half of it. You said, forget this. I'm gonna learn on my own. I'm gonna figure this game out.
Yes.
How was it that you just started to like? Did you just focus on OTCs right away? Like, was that just like a random occurrence that became a gift? Like, you just focused there and you were kind of narrowed?
Yeah.
Like, how did that happen?
Yeah, that's a very good question. I think because I saw how that stock went up, I just started to look for other stocks that I thought were going to go up, and I just knew the OTCs. Like, I didn't even think of listed stocks. So I just stuck with that. Mm-hmm. And I think at that time too, the hard mailers, there were hard mailers. They were very popular.
Yep.
So I would actually look for ones. It started out, it's kind of like my mentality was looking for other people's deals.
Okay.
If that makes sense. Looking for a stock that's about to be promoted and get in before it's promoted. That's kind of what the mentality was. So I would get in ones. I remember like AUML, you probably don't know these tickers, CNDD, ones like that I would get in. I'd see volume or whatever it was, and I would get in. The biggest trade that I ever took back then was CNDD went from $1, and I got in about 105. It went to 10.
Jesus.
Yeah, so they went crazy back then. So that's basically what I would do, is look for ones that I thought were going to go up and try to get in them early.
So like, how did you teach yourself this? Like, what happened? I mean, because I need to fill in these blanks.
Yeah, okay.
Because you just start teaching yourself and dive into this. You stuck to OTCs. You look at hard mailers, and for those who are not aware, a long time ago, promoters would send actual letters in the mail to people promoting stocks.
Correct.
And sending tips over message boards. That's how they would do it. Message boards, mailers, and really try to pump the stock up. Nowadays it's different. And it's on Twitter, social media, and all of that. So you would get the mailers. That would be kind of like one indicator for yourself to be like, okay, this is like a stock I'm interested in. Like, could you walk me through the process of how you kind of built and developed a system through that time?
Yeah. So what I would do, actually, when I got the mailer, that's when I would either be selling or be ready to sell.
Okay.
Because now I know that the masses know about this stock.
Yep.
So I would try to look for it before it ran, before it got to the point where the promoters are really going to, really dump shares. I mean, they're obviously dumping as it goes up, but they're also holding it down. This is one thing I learned. They were holding it down because they had so many shares to sell. The reason they could walk it up the way they were, is they were actually holding the pressure down, if that makes sense. It's kind of reverse thinking, because if they just sold all their shares and ran out of shares, it would do this. So as it went up, they'd peace out on the way up, and that's how they'd hold it down. When they ran out of shares, you could tell, because it just basically went climactic, and they'd have no more shares till left. And that's usually when the mailers came out. So I would try to look for something maybe with volume coming in, maybe something that hasn't traded before, because back then that's pretty much how it was. That's how you knew. It was like fresh, like IPO-ish. Doesn't have volume. Or maybe it's been doing nothing for months.
Yep.
And then all of a sudden some volume starts to trickle in. Right, and it starts to creep up, right? It looks like it's being walked up. So I would look for things like that.
What would that indicate to you? Why did you look for that?
I think because of that first trade. I think because I realized that there were people that were getting in before the big move. So I would just try to look for like things before that big move. Does that make sense?
Yeah, it does make sense. And so it sounds like you became profitable very quickly. How quick was it? Like how long did it take you?
Yeah, it was within a few months. I think it was 4 months.
Okay.
Because I experienced my first halt on one. It was BOCX, and I lost a sizable amount was actually it was suspended for 10 days.
Oh, wow.
And then when they get suspended, they open at the gray sheets and they open like 90% down. At least back then, that's what they did. So like that was a bad loss. But after that, I started to find some of these plays and started to become profitable. But that basically, you know.
When did that happen, by the way? Like 4 months in?
Yeah, 4 months in.
So you were making money and then you just lost a lot?
Yeah, I think by the 5th month is when I became profitable on my own. But it took me time to make back what I lost on those 2 bad deals.
Yeah.
That probably took about a year and a half. But on my own, where I could say, okay, these are all the trades I took, about 5 months.
People are going to hear this and they're like, because they're going to be like, what? 5 months? Like,
yeah, I know.
How's that happen? Why do you think that is? Like, how is that even possible? Were you still holding down your business and had other businesses on the side at this time?
Yeah, I was, and that's one of the reasons why I went in the last 90 minutes. I think I learned a lot from that first trade. I learned a lot. So
How old were you at this first trade?
Geez, I don't know. My 30s.
Your 30s?
Yeah.
And the reason I'm trying to get this idea is like, because you own a business at that time.
Yep.
So you had some, your mindset's a little different than, someone coming straight out of college trying to get into this, right?
Correct.
And then you were thinking about opening a nightclub, or you did at that time as well. And you said you traded only the last 90 minutes. I think that was a huge advantage for yourself. Like, because you had so much things going on that you couldn't really focus and just sit there at the desk all day.
Yeah, that's actually a good point, because I didn't go full-time. That was in 2002, and I didn't go full-time till 2007.
Okay.
Full-time, because I basically lost businesses. I lost everything. I filed bankruptcy. I lost everything.
On the business side?
Everything. Because Verizon came in, they came into malls we weren't in. They weren't in, and then they just basically put us out of business because they were controlling the whole operation.
Yep.
And then I had a nightclub for a short period of time. That was gone. And I remember the only way I could trade during that bankruptcy period was I had $1,000 cash, because my bankruptcy attorney said, this is all you have, cash. You can trade with it. So I traded with it, and within, I guess it was 6 months that it took.
Wait. So when did the bankruptcy happen?
2007.
And when that happened, you only had $1,000 to trade with?
Yeah, I only had $1,000.
After you made all this success and then all this happened?
Yeah, because I lost, even my trading, all the money I made in trading, I had credit cards. The last loan I took, I think, was $100,000 through American Express. I was trying to keep my business afloat. Some people know when to get out.
Yeah.
I'm one that I go down with the ship.
Okay.
I tried to save it. You own a business that long, it's like it's part of you.
Okay.
So it's really hard to let it go. So
your trading and profits were going to the business too?
Just to keep the business alive.
Okay.
Yeah. And then it got to the point where it wasn't enough, so I had to take loans. And then I had that 1,000, and in that 6 months period, I traded very differently, but I was able to make 30,000 in that 6 month period, which was able to carry me out of bankruptcy into trading, full-time trading.
That's insane. How you would think when you lose all your money, when you go bankruptcy, it would make it even more stressful to force trades. Did you run into any problems with just trading random stuff? Did you have any issues with trading at all? Was it just I kind of knew what I wanted to trade right away? There had to be something that you learned or saw. How did you develop that? That's where I'm lost here.
Okay, I think, and I'm not sure if I'm going to answer this right,
Sure,
so you tell me if I am, but I think one thing I learned is one of the biggest losses I took was the symbol ARME, which again doesn't trade anymore. And I took a and this is before bankruptcy, I took a $64,000 loss on that. That was my biggest loss on my own.
Yep.
Actually, that wasn't on my own, that was one of the tips. But I kept buying and buying and buying and doing the wrong thing. And it got to the point where I just couldn't take it anymore, and I just dumped all the shares. But I learned from that point, okay, I can only lose a certain amount each trade. So I learned very quick about risk from after exiting that trade. I could think clear. I'm like, okay, so I'm not going to lose more than this per trade. So my risk was, actually I started out with going in at the time $10,000 for every trade. And then from there I figured out, okay, I only want to lose $250 per trade. And then I started calculating my shares. So the risk helped me a lot. I'm only going to lose this much per trade.
Yep.
Yeah, I did that.
Yeah,
so
no,
that
it does.
helped.
But I'm just want to know, how'd you kind of like develop your strategy? Like,
okay.
How'd you do that? Like,
I'm a chaser. I'm a momentum chaser. So basically, I just look for stocks that I think are going to go up. I know that sounds ridiculous.
Yeah.
And it's hard for me to tell you exactly what I'm looking for, other than I'm buying highs a lot.
Yep.
And I'm pretty much just looking for stocks that I think are going to go up when they're in play. So there has to be momentum. They have to be moving, and it's usually breakouts, right? So I'm like a breakout momentum
player.
Yeah.
So to go back, 2007.
Okay.
You file bankruptcy. You have 1,000 left. You grow that to 30K, and that gets you on the races to get back into full-time trading.
Correct.
What happens next? Like, is it just smooth selling for like years on out? Like, what happens next?
No, because of OTCs.
Yeah.
There's usually, and this is very different from 2020. Let's see, 2022, January 22, literally January 2022. I mean, it changed. 2021, I did better than 2020. I know a lot of people, 2020, they did better, but I did better in 2021. 2022, January, literally the first trading day, January 3rd, it just fell apart. It just fell apart. And it's still like that.
What do you mean it fell apart?
The liquidity was gone. The momentum was gone. Stocks on my scanner were very minimal. The moves just weren't there.
So from 7 to 2021, it was pretty peachy?
It was good, but there were times where, like, I remember I think it was 2014, when the marijuana stocks were going crazy. Or maybe it was 13. And I remember January to March, I made a boatload of money. And then April to December, I made nothing. Just equity curve was flat, broke even. So that would happen a lot in OTCs, a few hot months. Doesn't mean it's going to be the first three or the first last. Could be January, July, but usually you have a few months. Could be random. But this, from 22, this I haven't seen. This is very different. Although this year I'm doing much better than I did last year. I didn't lose last year, which is good, because for my psychology, I thought I was going to have my first losing year.
Yep.
Not that it's a big deal, but psychologically, it would have bothered me.
Yes.
But it's just very different now than it was then, yeah.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you could just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. Okay, so what would you say has helped you the most in really being able to find profitability fast? Because it seems like you did it. You did it very fast, but then also maintain it right away. Because most people would you hear the stories of, I meet tons of traders where they'll make tons of money and then they lose it all, and it might happen really fast, or it might happen over the next 2 years, just straight losing. So what helped you with that?
Great question. I think there's something, I do have resilience. There's something about me that can come back from bad losses, but I don't really think, I think more about what it is controlling risk, right? What I talked about, the same risk every trade. I've never felt to force a trade. I shouldn't say never, but it was rare. Like I would come in, I do the same thing now that I did back then. I would come in and I'd look, and if there's nothing there, there's nothing there.
Yep.
I'm not going to take a trade if there's nothing there. So I think that helped, because I don't always feel like I have to force a trade. When things aren't going well, you start to feel more like that, but I just back off. I don't force it, so I think that helped. Trading psychology, and I know there's mixed feelings about this. Hands down, my belief
Yep.
And I've talked to other people that run rooms.
Yep.
That trading comes down to probably 95%, if not 100% psychology.
I agree.
Because, you can learn a setup in 5 minutes.
Yep.
You can take an hour and learn to trade. But that's going to mean nothing if your psychology is a mess. And what people don't understand is you don't have to fix your psychology. You just have to
learn it.
Right. You have to understand yourself.
Yep.
So I think, and thank you for saying that, because this is important. This is huge. You have to trade what aligns with your personality. And I think that's what kept me consistent. I know I can only trade the last 90 minutes of the day because it's all I can handle. Emotionally, mentally, psychologically, I can't handle an entire day in front of a market. If I do, and I've tried it, by the time that comes around that I'm good at, the last 90 minutes, I'm done, I'm shot. So you have to find, and I'm also a chaser.
Yeah.
If something's, I can't buy pullbacks, I can't do it. It doesn't work with me for whatever reason. So I think finding
that's interesting too.
Yeah, and I didn't look for that.
Yeah.
It just happened. But I realized over the years.
So how did you kind of discover like the last 90 minutes was for you? Like, because it seemed like you said that, you did try trading throughout the day and it just wasn't for you. It kind of made you tired or exhausted for the last 90 minutes where you found out that was your sweet spot. But how do you know that?
Yeah, so it was it just happened. Because
Okay.
when I had the stores, I didn't have a lot of time.
Yeah.
So I couldn't look at the market all day long. But when in that one stock, which I learned a lot from that first trade, we would notice that a lot of the volume, a lot of momentum would come in towards the close. So I think I just carry that into starting to look for other stocks. Like that's where the action is.
Right.
That's where I want to be. I don't want to be where the action isn't. So it kind of started out that way, and I didn't have a lot of time because I had the stores. So, but I could take the last hour, sometimes the last 15 minutes. Sometimes the last 5 minutes. When I had a club, it was like the last 5 minutes. The last 5 minutes of the close.
Yeah.
I'm going to get in there. I'm going to figure it out. Like, no matter what I have to do, nobody bothers me for 5 minutes, right? So it started like that. And then what was the other question? I'm sorry for that.
Is like, how'd you realize that trading throughout the day just wouldn't work for you?
Yes. So I did experiment.
Yeah.
Over the years, and I remember specifically I tried listed stocks for the first time in I think it was probably 2009.
Okay.
And for a month I said, you know what, I'm going to trade listed stocks for a month, like all day. And I did it, and I broke even.
Okay.
Which is better than losing.
Yeah.
But it got me nowhere.
Yep.
It took a lot of energy, a lot of time.
I bet you were exhausted.
And I was exhausted. And by the time it got to my OTC time, I was shot. So I wasn't even making money there. So then I figured, well, again, over the years, you start to try, because what am I going to do like that January through March with the marijuana stuff? What am I going to do April to December? And you never know how long it's going to be like
when
that.
it's going to be.
But what am I going to do? So I start to experiment more. Now I keep very good stats, my own Excel spreadsheets and TraderView, and I can look back and see that all the trades I've ever taken, whether it's morning, and some were, revenge trades.
Yep.
Some were, just fear of missing out, whatever it is, looking when I shouldn't have been looking. But if I look at all the trades, I either break even at that time, lose, or make very little money. So why am I going to spend all that energy and time even if I'm making money, very little money, when all I need to do is spend the last 90 minutes, if I want to make more money, increase my risk.
Yep.
So that's basically how I learned over time from stats.
Yep.
Even though I know emotionally, mentally, physically, or not physically, but emotionally, mentally, psychologically, I can't handle it, the stats tell me there's no point.
So I'm glad you brought up stats, but I'm also glad earlier you said that psychology and finance setup that meshes well with you. Mm-hmm. So how does your setup, can you explain your setup, like in terms of how you play it? Because I know you say the last 90 minutes is when you enter.
Yes.
So and I know what you do because we have conversations off camera, but the audience does not know. So could you explain, in general what you do and how you hold a trade?
Yes.
And then how that meshes well with who you are?
Yeah. Okay. So, and that's a good question too, because this is right about personality. So I know when I place a trade in the last 90 minutes, I need to put in my stop because that's my rule, and I need to hide the stock. So
Which
I
is so
use
crazy.
scans. I use scans, so I ban it. So I cannot see it. I take it off my watch list, and I use TD Ameritrade to place a trade. I hide the position and the dollar, so I can't see anything.
Yep.
So I know nothing what that stock's doing for the last 90 minutes. My stop's in, that's it. I can't look at it. So that's number one.
Yep.
Number two, the market closes, I put my stop in and I leave it. And the following day when I go into the market, I can't see it because it's still banned. And I can't see, even when I open, it sounds ridiculous, but even when I open my TD Ameritrade, I haven't figured out I still have to put like a pillow on the screen so I don't see when I log in, like whether I'm up or down, because there's an arrow.
Yep.
So I cover that so I don't see it.
Yeah.
And then I open another tab, and then I take the pillow down, and now I'm back to business, and I can't look until after the close. Because I have been in so many trades where I see it by mistake even. Mm-hmm. Like I see the arrow by mistake, and then I look, and I might be up a huge amount of money, and then all of a sudden I want to protect profit, so I'll put in a tight stop. There was one trade in 20, and I know 2020 and 2021 were insane years, but there was one trade where I was literally up, I think it was 27,000 in one trade, which was a lot to just carry it overnight, and I couldn't deal. I put a tight stop. Well, I remember going to the dentist that day, and I couldn't stop like looking to see because I got stopped out with like 25,000, and it would have been like a $70,000 trade, right? So that hurt. That hurt. So I know that I just cannot look because I'll always make the wrong decision by looking. So that's my personality.
Yep.
I know what I can and can't do. And rather than trying to change my personality or learn a different way, I'm just going to figure out a way to trade with my personality.
Yeah.
Right?
Yeah, I love that.
So many people don't realize it's so important. You have to trade with your personality. It has to line up.
I want everyone who's just heard this to rewind that section, because you heard correctly. He deletes the stock from your watch list. You put your stop in and you let it play out. So how do you, because I know people are going to be like, well, how do you know when to take profits? How do you take profits?
So I put in my stop at the close. It's very simple. There's nothing magical about it. For me, what works is green to red.
Yep.
So if the stock goes red the next day, I don't want to be in it.
Yep.
Now, there are plenty of times I get stopped out right at the open, like the first minute, and then, or the first few minutes, and then it turns and I would have made a lot of money.
Right.
But I would rather be out of the stock than to be in it past that. And I guess the reason is probably that goes back to that biggest loss that I ever took, that $64,000 loss.
Yep.
I'd rather not be in it and miss it, than to be in it and write it down further.
And take a massive loss.
Take a massive loss, because I don't know. And the other thing is, I do green to red. Again, this is nothing magical. You could do the low of the day. You could, whatever it is you come up with.
Yep.
It's one way that I can be consistent with my exit, which is, I feel, so important. It's a consistent way of taking profits or my stop. If I try to base it on support and resistance, or like, what is support and resistance? You know what I'm saying? Like, it doesn't work. So I have a very systematic way of saying, this is where my stop is. I don't have to think about it. I just put it there.
And and this probably goes into how you track.
Yes.
Because you said, like, if it's very consistent, it's a systematic way, then you can track it, and you can how do you track? Like, how do you actually track?
So I use TraderView, as I mentioned, but that only helps me so much.
Okay.
I use Excel.
Yep.
And I manually enter different exits. And this is probably huge for so many traders. Because I was working with a really good friend of mine.
Yep.
And I was managing his system, basically. He told me what to do. So all I was doing is what he told me to do. But we were tracking exits, like 3 or 4 different exits. And that's how he would base on what works best, what exit is most profitable. And one day, after probably a year of doing this, it dawned on me, I wonder if I tracked my exits. Because even though I didn't have them like tracking, I knew what they were. Like I'd either sell at the open, like a gap, or I would do I'd try to swing it and do the green to red. or I'd try to sell it somewhere after the. I mean, it was the same thing. Or I'd try to sell it intraday, like right at the close.
Yep.
So those were
the last 90 minutes.
Right.
Okay.
Those were the few that I started with, and so I tracked those, the ones that I knew I was doing, and I was blown away that for me, this was working better. The green to red.
The green to red. Yeah.
Right.
So that's
now,
how you found out.
Right. Now here's the thing. It's not the most consistent.
Okay.
Because last year I tracked, because last year was such a struggle, I tracked other ways to exit, like the following day, like using a 5-minute, 15-minute, 30-minute, 60-minute low of the bar at the open. So does that make sense?
Yes.
And just track that. And I found that, I forget which one it was, I think it was a 5-minute, actually was more consistent of an equity curve. Like it would have made a good amount of money last year.
Yeah.
And like I said, I broke even. But it would have made more than I needed to pay my bills and then more.
Yep.
And it was very consistent. So there are exits that I have that are very consistent. But the problem is, like this year, that wouldn't have worked. Like my swings work better. So what I have learned is, even though my exit and this is what some might not be able to handle. I can handle a drawdown. Maybe at the beginning of the year, maybe a few months, whatever it is. Because I know, because I have the confidence, because I have the data to back it up, years. I mean, I have exits from 2015, right? To back it up, to know from the way that I trade that this works. And it's so important to have that. Because if I just didn't have the data, I couldn't trust it, right? It's like somebody trying to follow a trader. Like, well, I'll just do what they're doing. I'll enter alerts. I'll enter and I'll exit. But you can't, because they might let it go against them when they're exiting, and you can't do that because they have the confidence, even if it doesn't work. But then you start doing crazy things.
And you also don't know their plan.
You don't.
You don't.
You can't be in their head.
You can't.
You're right. That's a good point. You never know, and they may
They might not account it for that.
That's right.
In their size.
That's
in their position.
right. There's so many things, and this is why alerts don't work. This is why following. You could sit next to another trader and it won't work.
And I have done that.
Right. So you know.
Next to a trader, and I was like, nah, it just doesn't work that way.
You know.
It just doesn't. And it's great that you track so many ways of taking your profits, but what you nailed on is saying that what your edge is as well, what part of your edge is your experience, and because that you tracked the confidence that you know during drawdowns.
Correct.
That I can still execute my plan even though I'm in a drawdown, because if you don't execute your plan, then what could happen is you never get out of the drawdown because you don't consistently execute, right? Because because a lot of people, they'll have a setup, it works consistently, but then they hit a drawdown and then they lose confidence and they stop executing well, and it doesn't matter anymore. At that point, you completely broke the system, so you'll never get out of that system, out of that drawdown. That's right. Before we start to wrap this up, Jay, what do you feel like has been the biggest, well, actually two things. I don't even want to wrap this up, even though I said that. The first thing is, because I remember we said this a while back, 2022, everything changed.
Yes.
What do you mean by that? Like you said, everything dried up. Everything is like slower. There's not that many plays, nothing that's clean. How have you adapted to that? Like how are you handling that?
It's hard. Like I said, this year is much better than last year, because this year I pretty much paid my bills this year. Last year I didn't, because I broke even. I do everything the same, I guess, is the way that I adapt it. I do everything the same. I spend a lot of time on reports, so I still look for how can I tweak this? How can I, what can I do, to tweak it? But I'm still going to stick to the same. I'm always going to stick with the integrity of the system. Yep. Right? So I'm never going to change that. But I'm still, like, I'm much more selective, but I think that becomes almost default because there's just nothing there. Yep. So I'm not going to, like, start looking for stuff that's not there. It's not there. It's not there. Yep. Yeah. And there's something about that where you just say, if it's not there, like, because you mentioned a long time ago, maybe it was off camera or at the beginning of the conversation, where a lot of people always want to trade. Yeah. And that's like a big weakness, right? Like a lot of people are just like gamble, like I want to trade. Whereas you have a lot more discipline from the beginning. And I think it's because being a business owner, not having a lot of time. Correct. You got to be more focused. You got to make good decisions. That you have
gone on the side of if it's not there, no big deal, no trade. Why do you feel that a lot of traders are the opposite? I'm just curious. Like, do you have a theory on why you feel like a lot of traders just always have to trade, and that's probably what's making them lose a lot of money?
Yeah, I think that I think that's a complicated question, but I have some ideas. I think that I think there are definitely some gambling type people that just want the action. And somebody wrote a book, I forget who it was, but they said you always get out of the market what you want.
Yep.
And so that's what they're getting out of the market, even though they're not thinking that deep. But that's really what's going on. They want the action.
Yep.
And I think that, people today, like when I got in, I didn't get in to make money. It was just a dumb tip or whatever.
Yeah.
And, I think people want to get in to make money, which obviously that's why we do it. But like, that's why they're getting in.
Yep.
I didn't get in for that. So for me, it started to sort of become a passion to figure it out. So I think that people don't really spend enough time trying to figure it out, like for themselves, for a bigger reason than to just make money. And I think if they're just getting in to make money, that's all they're ever focused on, and that's the wrong thing.
Yep, that's a good point, man. And before we wrap this up, because I know people are going to be like, why are you wrapping up so soon? I have more questions. I want to ask Jay something. How can people get in contact with you?
So the easiest way, Twitter, X, whatever we're calling
Twitter,
it these days.
X, whatever the new name's going to be. Yeah.
At C8 OTC Trader.
Yep.
And if you want to email me, you can do the same thing.
Okay.
At C8 OTC Trader at
Outlook.
Outlook, correct.
Outlook. And we'll provide links below so that way they can easily get to you. But again, Jay, hey man, it's been a pleasure talking to you today, and thank you so much for sharing your story, bro.
I appreciate it. Thank you, Alex.